Okay, so we had a ton of great questions on today's webinar. We didn't get to them all, so I've consolidated the remaining questions. So many great questions here. We want to make sure you get the answers, so we're just going to dive back in and continue with the Q&A. So Raj, Richard, and Anthony, you all asked a similar question. How are owner distributions taxed, and are there limits or capital gains? So as a refresher, we talked about this in the session. The way you receive your income in an S Corp is in two buckets. You've got your total profit, and then of that profit, you've got a reasonable salary that's running kind of direct deposit through payroll. And then the remaining is through an owner distribution, where you as the owner facilitate a transfer from business checking to personal. The owner distributions are the portion of your income that get to skip self-employment tax, but you will always pay your personal income tax rate on owner distributions. So your entire profit out of the S Corp is always subject to income tax. Distributions just get to skip the additional self-employment tax layer. The next part of the question is, are there limits or capital gains tax? So in terms of limits, you as the owner facilitate the distribution and the cadence. You want to make sure you're factoring the reasonable salary so that both are happening. Typically, we say don't drain the business bank account. We need to make sure there's still money to fund normal operating expenses. And in terms of capital gains, if you take distributions, there's this concept called basis. It's essentially, in a way, tracking your equity in your S Corp. In the instance that you take distributions in excess of basis, it can trigger capital gains tax. And so a simple way, this is not the technical explanation, but a simple way in practice to maybe mitigate or lower the chance of basis issues is ensuring that you're not draining that business bank account through distributions. If there's a cushion, you're leaving some of your profit in there to keep running business expenses, the chances are you may not run into an excessive basis and trigger those capital gains. How is business profit taxed after paying a reasonable salary? For example, $60,000 salary and $100,000 profit. Okay, so similar to the last question, your entire profit out of the S Corp is always subject to your personal income tax rate. So personal income tax rate is based on your filing status, so married, filing, joint, single, head of household, and then it's your total household income. So you factor in maybe your full-time corporate role salary, your partner's salary, your self-employment income, maybe you've got a rental property. Those two factors, your household income and your filing status, will determine your income tax bracket or your tax rate. And then that remaining business profit will be subject to that rate. And then if you live in a state with state level income tax, that will apply as well. Lori, Mel, Katie all asked a similar question. What qualifies as a reasonable salary and how often does it need to be paid? So in the session, we did touch on what constitutes a reasonable salary. We mentioned that the IRS's guidance is very vague. They don't give any formulas or any real direction. One of the best, more comprehensive approaches would be finding a comparable salary based on, where you live, your seniority and the type of role, whether you're working full-time or part-time in this business activity. You can kind of establish a range for yourself. Ultimately, you can decide on this range. And then keep in mind that salary is fluid, so you can make adjustments throughout the year. You can make adjustments every year annually like you would with a regular salary increase. So there's a lot of opportunity to make adjustments. You're aiming for an annual target. In terms of how often does it need to get paid, you might have heard of people doing like a lump sum payment at year end. It's not advisable because the IRS wants you to pay into Social Security and Medicare tax throughout the year. And they also want to make sure you're filing quarterly payroll taxes. So when you do a lump sum payment, manual payroll at year end, it kind of sidesteps those requirements that the IRS prefers. In terms of what's common for collective members, they can do weekly payroll cadence, bi-weekly. I think a lot of our members actually opt for monthly because they have some seasonality or flux, or they can't always rely on a normal, cadence of getting paid. So throughout the year is better than a lump sum payment, but you as a business owner can ultimately decide the cadence. Do I have to pay myself a salary if I'm not profitable yet? So if you're structured as an S Corp, meaning you've made the S Corp election, you've agreed to the IRS requirements for an S Corp, which includes a reasonable salary. If you're not profitable and you're not taking distributions out, meaning you're not taking any money out of that business to use personally, then you don't need to pay a salary. If you're not profitable yet and you're a sole proprietor or single member LLC, probably doesn't make sense to trigger this additional compliance requirement and add the S Corp election. In which case, maybe it's okay that you stay sole proprietor, single member LLC, where there isn't even a salary requirement for you as the owner. Under those structures, the way you pay yourself is via distribution. So literally transfer from business checking to personal. There's no formal payroll process requirement under those structures. Hannah, Brian, Urs, they're all asking a similar question. Can I retroactively elect S Corp status, and what are the timing limitations? So what needs to be in place before you elect S Corp status? You need a legal structure first. So this can be the LLC you form with your state. It could be the stock corporation, PLLC. That needs to exist first. So if you have an LLC or a legal entity in place, it does mean that technically the door is open to choose S Corp status for a date that's already passed. Go backwards. The IRS generally allows a late relief process. So if you were to elect S Corp status for 2025, the normal due date is to make the election within 2.5 months of the desired effective date. So if you wanted an S Corp effective January 1st, 2025, you would have had to make the election by March 15th for it to be considered a timely election. The IRS does have a late relief process, meaning you can still elect to January 1st. If it's after March 15th, you just have to fill out the paperwork a little bit differently. It's a little bit more complex. You need to state reasonable cause, but it is available. Further, the IRS allows you to elect S Corp status following late relief back to 3 years. Again, that's assuming an LLC was already in place or another legal structure. And then you consider, okay, what is it going to cost me to do all the catch-up work to get 3 years of S Corp compliance back in place if I want to go back that far? So typically we see people going back to the start of the current tax year because it's less catch-up work. We haven't passed the S Corp filing deadline for 2025 yet, so it's less administrative work. So technically it is available. There's a lot of catch-up work involved. So if you don't have books yet, you need to rebuild the books. You want to consider the fact that you may not have run payroll for a full year period, so there may be some catch-up required there. But if you have an LLC in place, it is an option to go back retroactively. What are the pros and cons or benefits of S Corp election versus LLC versus C Corp? So S Corp election and an LLC are both considered pass-through businesses, which means the business itself doesn't pay a corporate level tax, but rather the income passes through to the owners and the tax is paid at the owner individual level. A C corporation is the true double taxation structure. It files a corporate tax return. I think the IRS rate is 21% right now. This is the structure that has that double taxation concept where it will pay the corporate level 21% tax, and then there will be tax again when the owner takes a dividend. So this is the true double taxation structure. This is usually advantageous for businesses that want IPO. So think Google, Amazon, they've got international investors, unlimited investors, various classes of stock. So this structure is best for businesses that want to grow large. Contrary to that is an LLC, maybe better suited for a closely held business, single-owned business, and then it can add the S Corp election. So it may depend on your growth goals. A question that comes up often is C corporations have more formal reporting requirements. They often need a board of directors, formal board meeting minutes. So this is the C corporation where you're maintaining or anticipating big growth. An LLC with an S Corp election doesn't necessarily have those requirements. You'll file an articles of organization, you'll have an operating agreement showing the ownership allocations. But typically, an LLC with an S Corp election, it does not have some of those more robust reporting requirements like a board of directors and meeting minutes. Maribel is asking, how do I change from LLC or sole proprietor to S Corp? So if you're a sole proprietor right now, nothing's formed, no legal structure, that's totally okay. The first thing you would need to do is establish a legal structure. And so that can be an LLC. You can form it at the state level, Secretary of State. If you already know that you want to be the S Corp and go all the way, that's something Collective can do in-house. We can form both the LLC and add the S Corp election for you at the same time. If you're an LLC already, let's say you've got all the paperwork done with your home state, there's a form, the IRS form called Form 2553, and it's the S Corp election paperwork. All you need is your LLC name, your EIN, and you have all the information you need to file that Form 2553 to add the S Corp election. You'll also need to list the name of the owners, their social security number, their ownership percentage. Once that election is made, you'll wait on the IRS for confirmation. It could be a couple months. Sometimes they're a little slow, but you'll wait for confirmation. But assuming that the paperwork was filled out properly, you can start putting into place all the operational pieces. So you file the S Corp election, Form 2553. Now it's time to start getting bookkeeping in place, payroll in place, identifying a solution for your future S Corp tax prep. Raina's asking, what is the tax filing process for an LLC taxed as an S Corp? So once the S Corp election is added, it triggers a separate S Corp business tax return. For the IRS, it's called Form 1120S, and then your state may have a corresponding S Corp tax return. These tax returns, it reports financial statements, which is why you need the bookkeeping. You need a balance sheet, profit and loss. It's going to ask for the reasonable salary paid to the owner. All of that's required to populate this S Corp tax return. It has a separate due date. So every year, if you've elected an S Corp, every March 15th, this S Corp tax return will be due. It needs to be filed first before you file your personal return because it's going to generate two important tax forms. One's going to be your W-2 showing your salary that you took out of the S Corp, and the other is going to be a form called a K-1, which shows the remaining business profit. Once that S Corp election tax return has been filed, you'll take those two tax forms and include them in your personal return that's due every April. So the flow of your tax season changes a little bit. If you get to March and you need to extend your personal or your business return, maybe you need to do some cleanup on your bookkeeping, maybe you need to buy more time for retirement contributions. Whatever the reason, if you need to extend your S Corp tax return, you'll likely also need to extend your personal, right? Because that needs to be completed first before you complete your personal return. What are typical business deductions and is there a guide? Yes, we have a guide. We can, if you go to our website, go to guides and blogs, and type in common deductions, we do have a guide. The industry, the nature of your business will also constitute to what's deductible, but general things like marketing or office supplies or retirement contributions or 1099 contractors, all of those are normal business deductions that may apply to any industry. If you're a photographer, think what's necessary for me to go on a shoot. Do I pay a second shooter? Do I need a lens so I've got equipment? I need Photoshop for editing. So what's ordinary and necessary for you to generate revenue is a good starting place. But there is a guide available on our website. It's free. Feel free to check it out. How are rental activities treated under an S Corp and should they be in a separate LLC? This is a great question. Bertha and Erica, you both asked something similar. So the S Corp, what it does is it's giving you an opportunity to control self-employment tax, which means your business activity should probably be a self-employed activity. So under the tax code, they have different buckets of income. Rental activities typically fall under what's called investment income, which means it's not typically subject to self-employment tax. So if you've got a rental property or vacation home that's on Airbnb, it's an investment activity versus a self-employment activity where you're actively participating to generate the revenue. So think a photographer going on site to shoot. I'm the photographer actively participating in shooting the camera. Versus rental activity, it's investment, it's kind of more passive. People are just paying you to use a space that already exists. So it's a different category of income. Therefore, we typically don't see rental activities housed under an S Corp because the advantage there is that you're mitigating self-employment tax, where self-employment tax doesn't apply to a rental activity. So if you've got, here's an example that comes up often. You're a real estate agent, but you separately own a vacation property that you rent out. Your real estate agent activity is considered a self-employment activity. That could be under an S Corp potentially. Separately, your rental property, it's not self-employment income, it's a passive investment activity, could be owned by you personally, it could be owned by a separate single member LLC, and ultimately it can just get reported directly on your personal tax return. It's called Schedule E. If you've got a couple rental properties, you might see it on your Schedule E. And then your self-employment activity would just get, reported separately on the S Corp tax return. What are collectives fees and what do I get with the membership? Kate, JC, Lisa, Raj, April. Great question. We're $349 a month to month, no contract. We have a one-time onboarding fee of $199. What do you get? If you need us to form an LLC, we'll form an LLC for you, get your EIN, file the S Corp election paperwork. If you're already set up as an S Corp or you're an LLC, we just pick up where you left off. Then we pivot over to the operating side. So in-house bookkeeping, we've got an accounting software plus an in-house bookkeeping team. So every month we're categorizing, we're making sure everything matches your bank statements. We've got a subscription to Gusto for payroll included in the membership fee. We do all the registration for you. We will prepare and file that S Corp tax return that's due every March. And then behind the scenes, you've got an advisory team. So if you've got questions about how home office deductions work, what 401k plan or what retirement plan is best for people who have an S Corp, you just book time with this advisor. There's no added fees. It's unlimited access to them. We've got in-app messaging. You can book Zoom calls just like this, all included in the $349 a month. Carrie's asking, does Collective support businesses with partners or multiple owners? At this time, no. We're built specifically for single-owned businesses that want to elect S Corp. Can I keep using Gusto if I join Collective? Yes. The separate Gusto fee that you're paying now would just be kind of reworked and absorbed into your Collective membership, and we would help facilitate that. But yeah, it would be a continuation. If it's the same business, be a continuation of that Gusto account. Can a parent S Corp own multiple LLCs? Yes. I was in public accounting. I did a lot of consolidated tiered entity structure tax returns that are more sophisticated. Depending on what you do, it could be the right structure or it could be creating more complexities than are necessary. But generally, an S Corp can have tiered ownership and own other LLCs. It's out of scope for Collective. We're built for a much simpler tax profile. But if it's something that you want to talk about with your CPA and it suits the needs of your business without creating, unnecessary filings, it's definitely allowable. What's the best order to start a business, i.e. bank account, LLC, S Corp? So if you're starting from scratch, you're a sole proprietor. Maybe at this stage, you've got the idea and the concept. Maybe step 2, you've got a couple clients on deck that you're ready to sign. Maybe that's the point at which you form the LLC. The LLC is what's going to give you a business name, tax ID, create a layer of liability protection. At the point at which you form the LLC, that's when you can go open a business bank account. You'll take those formation documents to whatever bank you like. Say I need to open a business bank account. They'll ask for the EIN, the legal business name. From there, if you are not profitable or highly profitable yet, you can coast at this stage. You're receiving business income to that business bank account. You're paying for expenses out of it. The LLC is in place, and it's setting the foundation for a future S corp election. So adding the S corp election could just be a timing thing. But in theory, sole proprietorship, nothing's formed. Maybe you've got contracts on deck, so you do the LLC formation. And then separately from there, after the LLC is set up, business bank account. Can I do business or own an LLC as a non-US citizen? So, yes, the answer is yes. You can own an LLC. Anybody can own an LLC, I believe. There are more restrictions for who's eligible to own an S corp. You have to be considered a resident alien, and there are certain stipulations on what constitutes being a resident. Green cards typically check that box. Certain work visas do not. So an LLC may be a lot easier, but if you're looking for an opportunity to reduce self-employment tax and you want to elect S corp, and you're not a U.S. citizen, you may need to talk to a tax attorney to determine what your resident status is and if it meets, whatever the IRS constitutes as resident alien. Can I contract and pay others like assistants under my LLC S corp? Do I issue 1099s? Yes. Yes. Easy answer, yes. When you issue 1099s, I think there's a threshold if you pay any individual more than $600 for the full year. That's what triggers this 1099 requirement. When you issue 1099s, just make sure you as the employer are using your LLC name and your tax ID. But yes, and it will be deductible. How can I build business credit separate from personal? This is a great question. When a business is new, there's not a lot of history to grant credit. So what I've heard is people will often have to give out their social security number and use their personal credit to start establishing a business credit line. So when it's early on, you may have to rely on your personal credit for that initial, business credit card. Once you establish business history, maybe you start separately developing business credit and can get granted a higher credit line, a small business loan. Grants kind of stand alone from you as an individual. But initially, from what I've heard, a lot of it may rely on your personal credit. Can a W-2 employee start a side business, and what structure is best? Absolutely. Maybe maybe your employer may have some non-compete rules. Maybe consider that. But there's nothing that says you can't be both. And that's actually a lot of what our members are doing. They've got a full-time corporate job, and then they've got the side hustle. In terms of what's the best structure, if it's new, maybe a sole proprietorship. Maybe it's not worth taking the step to formalize and pay the fees for an LLC. Maybe you're just testing the theory with one or two informal clients, and that would be considered a sole proprietor. You'll still want to track your income and expenses and report it on your tax return. And then maybe after time passes, you're like, I like this. I've got more clients kind of just organically lining up. Maybe then that's the time that you can start leveling up and, form an LLC and get more formalized. And then further, if you're starting to grow both, you can perhaps elect S corp status, and you can have both. You can, be a corporate employee and a business owner at the same time. This webinar will be recorded. We're going to post it on YouTube along with this Q&A overflow video. Stuart's asking, what is the meaning of the S in S corp? It comes from part of the tax code, subchapter S. That's what it stands for. If you're curious to read the tax code and just see it written in the, IRS database, it's just subchapter S. What is the difference between entity type and tax classification, LLC versus S corp? This is a great question. So entity type is referring to a legal structure. So this is what's formed at the state level, usually with the Secretary of State. Legal entity types could be an LLC. It could be a stock corporation. If you've got a professional license, your state may have an option for a PLLC, professional license, or a professional limited liability company, or your state might have a professional corporation. Those are all legal structures formed at the state level. They give you the business name, the tax ID, liability protection. Tax classification or tax status is how the IRS, how you report your taxes to the IRS. So a disregarded entity or a sole proprietorship could be a tax classification. What that means is the business activity gets lumped in with the personal. The IRS sees you and your business as one and the same. Versus like an S corporation is a tax status where now you're reporting that business activity on a standalone S corp tax return. So entity type is the legal structure underneath. Tax classification is how the IRS sees you for tax purposes. What is the process and benefit of starting an S corp from scratch? So the process, if you've got an LL or a sole proprietorship, that means you need to do the whole thing. Start with a legal entity, add the S corp election, then put all the operating pieces in place. So one, it would be starting with a legal structure, then filing the Form 2553 to add the S corp election, and then pivoting over to making a plan for bookkeeping, payroll, business tax filing. The benefit, well, assuming that you've had a conversation with an accountant or a collective advisor, the advantage of an S corp is potentially reducing your self-employment tax. So if you are a sole proprietor and there's nothing formed yet, but you've already proven your concept, you're already earning 100,000 of profit as a sole proprietor, that's an instance where you would go through the full process from scratch, LLC formation to S corp in one fell swoop. And then moving on to all the operating pieces of an S corp. So if you've proven the concept of your self-employment activity, you're committed to it, and you're currently a sole proprietor, the benefit of doing it all from scratch is you're ready to go. You're ready to go for S corp, for tax savings. You've proven the concept, you're committed, and you can tackle it all at once. Last question from Katie. Will Collective ever support non-S corp LLCs? Well, I'm glad you asked. Yes, we will. We are working on a product that's specific for people who want to stay sole proprietor or single member LLC. And this can be for any situation. Maybe your high earning W-2 makes S corp not advantageous, or maybe you like the simplicity of your single member LLC. We are building a product to serve you if this is for you. These are great questions. Thank you for tuning in. We will continue doing this. Tune in next time. We've got webinars every 2 weeks, different speakers, always an opportunity to ask these questions, and we'll see you next time. Bye.